Gershon, this feels like lose-lose. A lot of people in this market are paralyzed by this. We heard from Max Kettner of HSBC a number of weeks ago, who basically said, it's heads you win, tails I lose. Gershon, does it have to be that way? Is it bad? Bad if they hike and bad if they stop?
Well, it's certainly bad on the surface, but it always comes down to what's priced in. And, some of the strongest returns we've seen in markets, particularly equity markets, have been when things feel really, really bad. They felt really bad in 2002, in 2008, 2011 with the European debt crisis, and during COVID. The question is what's priced in. I will take slight issue with something Mohammed said. He's saying that the Fed will pivot if it becomes clear that the risk of recession is just too great. I think we're there already. I think the odds of a quote unquote soft landing have really gone to close to zero here. There's going to be pain, question of how much, and the Fed has been clear they're going to keep on going, and other central banks are going to as well. So there's really no getting out of the economic turmoil, and growth is going to slow and weaken and even go negative, particularly in Europe. But the question is, how much is actually priced in right now? I think on the equity side, you could explain a lot of the decrease in PEs and the sell-off. There's the change in long-term interest rates. That really explains almost all of it. I think on the credit side, it's a little bit more nuanced, especially as most companies in the high yield market did not lever up their balance sheets over the past couple of years.
Gershon, last time you and I spoke, early August, you said we were too negative on growth, too confident that inflation would fall. Is that still the case for you?
Starting point matters. I think that the markets certainly are very confident. You look at where one-year break-evens are; it's like 2.4%. So if you think inflation is going to continue to be at these elevated levels, you can make a lot of money betting on it the other way. I think, look, inflation is going to come down. There's no question. Housing is already starting to weaken with higher mortgage rates. The consumer is starting to pull back. We're going to see inflation come down. The question is, how fast is it going to come down? And quite frankly, just like, central banks were late to the game here in raising rates, almost certainly they're going to be late to put the brakes on. That's just the way cycles work. It's not some magic that you change policy rate and the next month the economy changes or inflation changes. There's a huge lag effect. So, I think the risk of a quote unquote another policy mistake of going too far is there.